Well, thank you for staying with us here on the news. It's time to talk business, and we begin with the aviation sectors. Local airlines have, in the last couple of months, lost at least 20 airlines to multiple bird strikes at airports across the country. Now, according to reports, the strikes, which range from minor to severe damages, have led to the aircraft being grounded without foreign exchange liquidity to finance severe engine repairs. The findings show that the 8 active local airlines are operating a cumulative 38.77% fleet capacity, with a total of 60 out of 98 listed aeroplanes grounded, pending the availability of foreign exchange earnings to defray maintenance costs. Head of Bird and Wildfire Hazard Control at the Nigerian Civil Aviation Authority, Mr. Azike Odeze, decried the high incidence, revealing that it will cost the airlines several millions of dollars. Away from the aviation sector, traders are hard hit by the ban on motorcycles in several states across the country and the threat by the federal government to outlaw commercial motorcycles, popularly known as Okada. Now, according to the foreign trade reports from the National Bureau of Statistics, motorcycle imports into Nigeria declined by 35.92% in the second quarter of 2022. The total motorcycle imports crashed to 47.8 billion naira in Q2 2022 from 74.58 billion naira in Q1 2022. This decline comes as the federal government considers banning the use of motorcycles in mining activities following terrorist attacks on the Kuje Correctional Facility on July 5, as well as other attacks recorded nationwide. To other stories now, the Nigerian Governors Forum has launched a public finance database to easily filter the fiscal and data information of states across the country. The development was part of the outcome at the forum's peer learning event in the nation's capital, Abuja, and the sub-nationals say it will reflect their commitment to fiscal transparency. Lara Falayo tells us more in this report.
A peer learning event on internally generated revenue by the Nigerian Governors Forum. The states say they will make their policies respond to the fast-changing tax environment to overcome evasion and avoidance. They believe their 2019 decision to reform the tax system towards greater efficiency and effectiveness has seen a 35% rise in IGR to 1.67 trillion in 2021. The tempo now needs to be sustained.
We must not lose sight of the need to sustain and advance the momentum of reforms, considering the decline in the FAC receipts. Our renewed effort must take into consideration the emerging dynamics surrounding private income in Nigeria, including the devaluation effect of the rising inflation rate.
There is the need to de-emphasize and depersonalize projects so that the citizen will begin to relate all ongoing laudable projects in the state to tax revenue. This singular act, to a great extent, will increase the tax morale and enhance compliance.
But there's only one economy, one Nigerian economy. And we all have to work collaboratively in building and growing this economy.
Some of this. Comparative analysis, same thing.
The high point of this meeting is the launch of a public finance database, which is the country's first reference database for state-level public finance data. The subnationals say it reflects their commitment to fiscal transparency, accountability, as well as a resolve to strengthening good governance.
The portal will host comparable annual data on government spending, revenues, and financing in all states, and will feature hundreds of performance indicators that measure the quality of public spending and the intersection of public financial management and service delivery in the country.
It's a veritable and collaborative tool for knowledge sharing among states, and it provides a platform to compare notes and build the capacity of the economic management teams in the states.
The meeting was themed State of Tax Reforms in Nigeria, derived from efforts made over the past 8 years to boost domestic resource mobilization through programs around evidence-based tax reforms advocacy and technical assistance to states. Lara Folayo, TVC News, Abuja.
Let's turn our attention now to global markets as the dollar surged to a fresh 2-decade high and Asian stocks hit a 2-year low today as the prospect of U.S. interest rates rising further and faster the unexpected left investors cautious. The Federal Reserve raised its benchmark rate by 75 basis points on Wednesday, the third of such rise in a row, and officials project rates hitting 4.4% this year. This will be higher than markets had priced in before the meeting, and 100 basis points more than the Fed projected 3 months ago. S&P 500 futures eased at 0.8% and European futures dropped at 2%. MSCI's broadest index of Asia-Pacific shares outside Japan dropped to 1.4% to its lowest since May 2020. Japan's Nikkei fell at 1% to a 2-month low in the global markets. Let's stay in Asia as Japan intervened in the currency markets today for the first time since 1998 to shore up the battered yen in the wake of the central bank's decision to maintain ultra-low interest rates that have been driving down the currency. The dollar extended its fall against the yen and was last down over 2% at 141.15 yen after confirmation of the intervention. It earlier traded more than 1% higher against the Japanese currency, which unraveled fresh 24-year lows. The move came hours after the Bank of Japan's decision to maintain super low interest rates to support economic growth, bucking a global tide of monetary tightening by central banks fighting to rein in soaring inflation. Well, the Bank of Japan's decision came after the U.S. Federal Reserve delivered its third straight rate increase of 75 basis points and signaled more hikes, underscoring its resolve not to let up its battle against global inflation. And to the automobile sector now, Toyota Motor Car has revealed just a moment ago plans to produce about 800,000 vehicles worldwide in October, about 100,000 short of its average monthly production plan due to semiconductor shortages. The reduction could be seen as a worrisome sign that the chip shortage will continue to make production complex at the world's largest automaker sales in the second half of the financial year to end March. That is seen as a crucial period for the group to bounce back from a production shortfall caused by the shortage in the key vehicle components and wider supply chain disruptions. Meanwhile, the company has not adjusted its global vehicle production targets for the current financial year, sticking to its forecast for a record 9.7 million units. The Japanese automaker said last month it aimed to produce about 900,000 vehicles per month on average from September through November this year. Well, to wrap things off now, oil prices on the international market rose today after sliding 1% of the previous session on the prospect of higher Chinese demand and geopolitical risks. U.S. West Texas Intermediate crude keeps rising with a 1.45% uptick, selling at $84.14 per barrel. The Brent crude futures is also up at $90.97 per barrel with an upward price review of 1.27%. Meanwhile, Bonnie Lights is still in the red zone, selling at $90.80 per barrel with a downward price review of 0.44%. And for the OPEC basket, crude oil is still static at $96.55 per barrel with an upsurge of 0.89%.